Welcome to Finance Flash. Today we're diving deep into the timeless wisdom of Warren Buffett, the Oracle of Omaha, by combining insights from 5 of his influential works. In this video, you'll learn life lessons, business advice, and the core principles of value investing. From the importance of a margin of safety and the power of diversification, to overcoming fear and greed, loving your work, and building a strong culture. Whether you're an investor, entrepreneur, or simply a lifelong learner, these lessons will help shape your mindset and guide your decisions. Before we dive in, just a quick disclaimer. This video is for educational and entertainment purposes only. Nothing here should be considered financial advice. Neither the information nor any opinions expressed here constitute a recommendation to purchase or sell any securities or to provide investment advice. Always do your own research and consult a professional before making any investment decisions. Now let's get started. Part 1. Life Lessons and Mindset. Let's start with the life lessons that have always underpinned Buffett's success. For Buffett, investing isn't just about money. It's about building a life based on continuous learning, patience, and integrity. Buffett Lesson 1. I have always believed in investing in myself. Takeaway: Buffett stresses that the best investment is in your own knowledge and skills. Your ability to think critically, solve problems, and adapt to changing environments is far more valuable than any financial asset. By consistently improving yourself through education, experiences, and self-reflection, you create a foundation for long-term success in any field. Buffett Lesson 2. The more you learn, the more you earn. Takeaway: education compounds over time, much like interest on money. Buffett is a lifelong learner, reading extensively on business, economics, and human behavior. This habit has given him a competitive edge in decision-making. The pursuit of knowledge isn't just about formal education, it's about staying curious, asking questions, and continuously expanding your perspective. Buffett Lesson 3. Time is the friend of a wonderful business, the enemy of the mediocre. Takeaway: patience is key. Strong businesses, like strong personal investments, grow in value over time, benefiting from compounding returns. On the other hand, mediocre businesses decline, revealing their weaknesses over time. This lesson applies not just to investing, but also to career choices, relationships, and personal growth. Aligning with long-term value is essential. Buffett Lesson 4. If you're not willing to own a stock for 10 years, don't even think about owning it for 10 minutes. Takeaway: Buffett emphasizes long-term commitment, advocating for true ownership of businesses rather than chasing short-term gains. This philosophy teaches discipline, patience, and a focus on real value rather than temporary market fluctuations. Those who think in decades rather than days are more likely to achieve lasting success. Buffett Lesson 5. I'm in the business of buying wonderful businesses at sensible prices. Takeaway: Buffett's strategy is simple. Seek quality companies with strong fundamentals and avoid overpaying. He believes that a business's intrinsic value should justify its price. This approach requires careful analysis, discipline, and an ability to ignore market noise in favor of long-term potential. Buffett Lesson 6. Business advice and value investing principles. Now let's turn to core business lessons. Buffett's principles of value investing have guided him for decades, focusing on intrinsic value, margin of safety, and the importance of sound business fundamentals. Buffett Lesson 7. Price is what you pay, value is what you get. Takeaway: don't be distracted by stock price movements. What truly matters is the underlying value of a company, its assets, cash flow, and future earning potential. A lower price doesn't always mean a good deal, and a high price doesn't necessarily indicate quality. Focus on value over price. Buffett Lesson 8. Our investments will be chosen based on value, not popularity. Takeaway: Buffett avoids trends and selects investments based on solid fundamentals rather than market hype. He believes in independent thinking and cautions against following the crowd, as popular opinion often leads to speculative bubbles and overvalued stocks. Buffett Lesson 9. Margin of safety is the secret to successful investing. Takeaway. Buying at prices well below intrinsic value provides a cushion against mistakes and market downturns. This conservative approach ensures that even if circumstances change or miscalculations occur, the investment remains sound. Buffett Lesson 10. Diversification is protection against ignorance. It makes little sense if you know what you're doing. Takeaway. While diversification can minimize risk, Buffett argues that those who deeply understand a few businesses can make more concentrated and profitable investments. Instead of spreading investments thin, he focuses on businesses he truly understands and believes in. Buffett Lesson 11. Be fearful when others are greedy and greedy when others are fearful. Takeaway. Market extremes create opportunities. When fear dominates, prices often drop below their true value, presenting buying opportunities. When greed drives markets to unsustainable highs, it's time to exercise caution. Successful investors stay rational while others react emotionally. Buffett Lesson 12. Corporate governance and managerial excellence. Takeaway. Buffett's writings aren't just about investing. They also offer profound insights on how to run a business. Strong corporate governance and excellent management are key to long-term success. Buffett Lesson 13. When you own a stock, you own a business. Takeaway. Think like an owner, not a speculator. This means evaluating the business fundamentals, management quality, and long-term growth potential rather than short-term stock price movements. Investors should analyze financial statements, understand the competitive landscape, and assess the company's future prospects just as a business owner would. This perspective helps avoid impulsive decisions driven by daily market fluctuations. Buffett Lesson 14. A great business must have an enduring moat that protects excellent returns on invested capital. Takeaway. A company's competitive advantage, its moat, helps it fend off rivals and maintain profitability over the long term. Moats can come in various forms, such as strong brand recognition, technological superiority, cost advantages, or customer loyalty. The wider and more durable the moat, the more secure the business's future earnings. Buffett Lesson 15. Management is more important than strategy. Great managers build great companies. Takeaway. Even the best business model can fail under poor leadership. Buffett prioritizes management teams with integrity, vision, and a track record of sound decision-making. He looks for leaders who act in shareholders' best interests, reinvest wisely, and maintain transparency. A company with an average strategy but exceptional management is often more successful than a company with a brilliant strategy but weak leadership. Buffett Lesson 16. Our goal is to maximize per-share intrinsic value by owning businesses with outstanding economic characteristics run by first-rate managers. Takeaway. Buffett's investment philosophy revolves around finding companies with strong financial performance, sustainable competitive advantages, and excellent leadership. He focuses on long-term value creation rather than short-term stock price movements. Companies that consistently grow their intrinsic value per share, rather than just increasing revenue or market share, are the true winners in the long run. Buffett Lesson 17. Overcoming market emotions and embracing discipline. Buffett teaches that successful investing is as much about managing your emotions as it is about numbers. His words encourage a disciplined, long-term approach even in turbulent markets. Buffett Lesson 18. Risk comes from not knowing what you're doing. Takeaway. Buffett's approach is to thoroughly understand each investment to minimize uncertainty. Risk isn't just about volatility, it comes from uncertainty and lack of knowledge. Buffett believes that the best way to minimize risk is by deeply understanding the businesses you invest in. The more informed you are, the more you can separate real opportunities from bad investments, reducing unnecessary exposure to losses. Buffett Lesson 19. The market is a device for transferring money from the impatient to the patient. Takeaway. Stock markets are often driven by short-term emotions, but true wealth is built over the long term. Impatient investors, driven by fear or greed, tend to buy and sell frequently, making costly mistakes by chasing hype or panic selling during downturns. On the other hand, patient investors who focus on solid fundamentals and hold through market cycles are more likely to see their investments appreciate over time. Buffett encourages a long-term mindset, reminding investors that those who stay disciplined and ignore short-term noise ultimately come out ahead. Buffett Lesson 20. We tend to concentrate on what should happen, not when it should happen. Takeaway. Many investors obsess over timing the market, trying to predict the perfect moment to buy or sell. Buffett, however, focuses on identifying fundamentally strong businesses and letting time work in his favor. He believes that while price movements are unpredictable in the short term, great businesses will inevitably grow and create value over the long run. Instead of worrying about when a stock will rise, focus on whether it has the right characteristics to appreciate over time. Buffett Lesson 21. I will consider you an enormous success if the next trade in this stock is about 2 years from now. Takeaway, frequent trading often leads to losses due to transaction costs, emotional decision-making, and chasing short-term trends. Buffett promotes a buy-and-hold strategy where investors should have enough conviction in their choices that they don't feel the need to constantly buy and sell. If you've picked a strong company, you should be willing to hold it for years, benefiting from compounding returns and avoiding the pitfalls of short-term speculation. Buffett Lesson 22. Synthesis, Principles, Passion, and the Path Forward. Buffett's core philosophy ties together value investing, risk management, patience, and integrity. His principles go beyond just making money. They shape how we think about business, decision-making, and life itself. By applying his lessons, investors and entrepreneurs can cultivate a mindset of long-term value creation, careful risk assessment, and disciplined investing, leading to both financial and personal success. Buffett Lesson 23. Don't confuse cheap with a good deal. Takeaway, a stock that is trading at a low price might seem like a bargain, but price alone doesn't determine value. Many businesses are cheap for a reason: weak financials, declining industries, or poor management. Buffett stresses the importance of looking beyond price and assessing a company's fundamentals, future growth potential, and competitive advantages. A high-quality business at a fair price is often a better investment than a struggling company at a seemingly cheap price. Buffett Lesson 24. It's better to be approximately right than precisely wrong. Takeaway. Investing isn't about achieving perfect precision. It's about making well-informed decisions based on sound reasoning. Buffett believes that trying to predict exact stock prices, short-term movements, or market cycles is futile. Instead, investors should focus on broad, reliable assessments of a company's intrinsic value. A reasonable estimate based on strong fundamentals is far more valuable than an overcomplicated model that misses the bigger picture. Buffett Lesson 25. Successful investing takes time, discipline, and patience. Takeaway. Buffett's entire investing philosophy revolves around long-term thinking, staying disciplined, and avoiding emotional reactions. Short-term market fluctuations, economic downturns, and crises are inevitable. But those who stay committed to solid investment principles will reap the benefits of compounding growth. Whether building a portfolio, a business, or a career, sustained effort and patience are key to long-term success. Buffett Lesson 26. I have no interest in large salaries or options. I want to make money only when my partners do. Takeaway. Buffett's leadership philosophy is rooted in ethical business practices and alignment with shareholders. Unlike many executives who prioritize personal compensation through high salaries or stock options, Buffett ensures that his own financial incentives are directly tied to the success of his investors. By putting his own money at risk alongside his partners, he reinforces trust and a long-term commitment to value creation rather than short-term profit-taking. Buffett Lesson 27. There are market inefficiencies everywhere, especially in smaller, less followed businesses. Takeaway: large, well-known companies are heavily analyzed by institutional investors, making it harder to find mispriced opportunities. However, smaller, less followed companies often present hidden value because they receive less attention. Buffett advises investors to look beyond the obvious and conduct deep research on under-the-radar businesses that may be undervalued due to market inefficiencies, offering strong returns over time. Buffett Lesson 28. If a great business gets a temporary discount, that is your opportunity to buy. Takeaway: market downturns and temporary stock price drops often cause panic selling, but Buffett sees them as prime buying opportunities. If a fundamentally strong company experiences a short-term dip due to external factors, economic uncertainty, investor sentiment, or broader market corrections, it presents a chance to acquire shares at a discount. Instead of fearing market declines, savvy investors recognize them as moments to build long-term wealth by purchasing valuable assets at attractive prices. Thank you for joining us on this journey through Warren Buffett's ground rules and enduring principles. I've left links to Warren Buffett's books in the description. Remember, invest in yourself, seek intrinsic value, maintain discipline, and always think long-term. If you found these lessons valuable, please like, subscribe, and share your thoughts in the comments below. Thanks for watching, and talk to you soon.